little bit. The session, traders taking a bit of a break, letting off some steam. Your thoughts on today's numbers?
I think markets around the region had a big impact in terms of the Aussie share market, and in particular we were watching Japan as well as the Chinese Shanghai Composite, and particularly in China we saw some important numbers coming out. With the services PMI was a number that we were watching today, and for the month of December we actually saw the second worst number on record, 50.9 for the month of December, and that's a fall from 52.5 in November. So that's actually the worst read that we've seen since August 2011, and the Shanghai Composite was down by 1.8%. Not only that, we saw Japan coming back from holidays and it was playing catch up. While Japan has been away, the US stock market has seen weakness. So the Japanese stock market down by 1.8%. So while the Australian market initially started off the day quite flat, you can see what happened intraday, and all throughout the morning we were seeing a fall before stabilising in the afternoon. So unfortunately down by 0.5% on the first trading day of the week. Some light volumes going through, about $2 billion worth of stock being traded, but pretty much red all across the board.
What do we look ahead to, Julia, that'll give a little bit of a spike, hopefully, in participation on the market?
Well, short term this week, we will see some more numbers coming out of China. In particular, we'll be watching the trade numbers, the import and the export numbers. There has been a bit of volatility, and hopefully this will give us a little bit more confidence that we are seeing the Chinese economy still growing quite strongly. We're also watching some local numbers coming out. Retail sales for November, we're expecting to see a rise of 0.4% ahead of that absolutely crucial Christmas trading period, and building approval numbers for the same month expecting to see a rise of 20.1%. But this week the big event will be the non-farm payroll numbers out in the US, where 193,000 jobs are expected to have been created. But I guess the big event in terms of the Australian share market and just recalibrating our portfolios will be the February earnings season. What we have seen is the market running up in anticipation of earnings, and now we really have to see that earnings growth materialising. So that's the number one thing for the markets over the first quarter. So the February earnings season will be absolutely crucial in expectations on how 2014 is going to pan out. And
it's early days, but where are your expectations, Julia? Do you think corporate Australia is going to deliver?
I think what we're at is an inflection point. The last 3 years have been absolutely horrible for Australian earnings. While the US stock market has seen double-digit returns coming through and double-digit earnings coming through, the Australian share market has seen flat or negative earnings. And this financial year is actually the first year where we are expecting to see earnings growth. And these things tend to move in cycle, they tend to move in trends. And the fact that we are expecting to see positive earnings growth should be the start of a multi-year trend. So really this year we're hoping to see earnings growth materialise, and that should help to support valuations on the Australian share market. The share market is always forward-looking, so we have gotten ahead of the earnings, and if those earnings do materialise, I think there'll be a positive support for 2014 and the returns in 2014.
On Ramsay and more broadly the space?
I think the healthcare space has been a key beneficiary of the weakness in the Aussie dollar, and this is going to be one of the most important themes for 2014. If we have a look at most of the healthcare companies listed on the Australian market, the big ones all have overseas revenue, and because the Aussie dollar has been falling, that's been great news in terms of earnings, and that's really underpinned demand for stocks. And if we have a look at the impact of a weaker Aussie dollar, I think it'll be threefold. First of all, in the short term, usually it's bad news for foreign investors, and they're usually the marginal buyers and sellers on the market. So short term it could lead to weakness on the Australian market, simply because the Australian market isn't as attractive to foreign investors when our currency is falling. But as our currency falls, the overseas currencies get stronger, and of course we may see some more takeovers coming through from international companies. So that's one thing to watch out for. But thirdly is the earnings impact. So many of the Australian companies do make their earnings from offshore. So that weaker Aussie dollar is, in the end, good news for Australian earnings and earnings season. So three key impacts that we're seeing, and the healthcare has been one area that has benefited very strongly from that falling Aussie dollar.
Looking at another area, strength obviously for the likes of healthcare, such as Ramsay, Julia. Weakness today, especially though, Woodside, other end of the spectrum, if you like, in terms of cyclical growth. What's going on there?
I think this may last for a few weeks, and there's really three things that we've been watching in terms of Woodside Petroleum. And first of all is the weaker oil price. Over the last week we have seen a significant fall in terms of the oil price, and that's really because of what's happening in Libya. in Libya, we've seen a 2-month blockade of about 350,000 barrels of oil per day, and now there's a halt in protests. We are seeing more supply coming onto the market. So that's led to weakness in the oil price, and that's had a hugely negative impact in terms of the energy sector, which has been the worst performing sector today. Secondly, with Woodside, that 23% Shell overhang that we've been watching, there is an expectation that we may see that offloaded throughout the next few weeks. So nervousness around that is adding to weakness in terms of Woodside's share price. And then thirdly, we are watching those Israeli oil assets. The fact that Woodside Petroleum may be paying more for its 30% stake than initially agreed around about a year ago at $1.25 billion is also causing weakness in terms of the share price. So I think those three things with Woodside Petroleum, and those factors will probably persist over the next few weeks. So looking at weakness in that energy sector overall.